Welcome to the look ahead for Friday, the 10th of November, with me, Fiona Cincotta, Senior Market Analyst at City Index. So as always, we'll just take a quick look at what to expect tomorrow. As far as earnings are concerned, the earnings calendar is quiet. As far as the economic calendar is concerned, first out will be Australia's statement on monetary policy. That came after the RBA raised interest rates by 25 basis points at the start of the week. Then we've got UK GDP for Q3. Now that's expected to show that the UK economy contracted by 0.1% quarter on quarter in the third quarter, after rising 0.2% in the second quarter. That's quite interesting. I mean, if we think about the data that we've been seeing for the UK in the recent months, it's been relatively depressed as far as PMIs are concerned, as far as retail sales are concerned. Now, interestingly, Bloomberg Research sees a 52% probability of a recession in 2023. We can see with this chart here, they see a deeper contraction still in Q4, which is in contrast to the Bank of England, which is forecasting potential growth in the final quarter of the year. But I mean, what we're seeing here is, high interest rates, rising unemployment, still sticky inflation. That means that households are becoming more cautious or behave more cautiously as far as spending is concerned. And that's really important in the UK economy, which is dominated by the service sector. So let's just take a quick look at what this means for the FTSE. You can see the FTSE has been trending lower across the year. Just more recently, it hit a low there in October of 72.50. It's recovered from that low, pushing above. There was some resistance there around the 73.80 level. It's pushed over that. We've seen some consolidation just below the 50 SMA, which is at 75.10. Now, if we can see a rise above that level, then we could see the creation of a higher high, and sort of buyers look to target the 200 SMA at around 76.20. On the downside, failure to rise above that 50 SMA could see sellers test support again at the 73.80 level. And if we did see a break below there, then again, 72.50 could be back in focus ahead of that 72.10, which is the level we can see there that has offered support on several occasions across the year. In addition to UK data, we'll also be looking at University of Michigan consumer sentiment. That's expected to fall again to 63.7, down from 63.8 previously. Now, that will mark the fourth straight monthly decline as the US grapples with concerns again over inflation and the ongoing cost of living crisis that we're seeing. Now, just to take a look at the US S&P, we have seen a strong recovery in the US index, and that's mainly on that narrative that the Federal Reserve could be at peak interest rates, or at least very close to peak interest rates. We've seen the price has recovered strongly from the October low of 4,100. It's retaken that 200 SMA, and it's testing resistance around the 4,400 level. Now, that's the October high. It's also around the 100 SMA, and it's also the falling trend line resistance. So that could prove to be quite a tough nut to crack. If we did get a rise above that level, then we'd be looking at around the 45 mark, 45.00, which was the September high. Failure to push above that 4,400 level could see the price come back down and test the 50 SMA there at 43.50, and then the 200 SMA, which comes below there. So that's what we'll be watching tomorrow. I hope you've enjoyed what we've shared with you today. If you do like what you've seen, then please remember to press the like button and do follow us for more videos like this.